Okay, good evening, dear all. So my name is Margarita Parushkina, and I'm a marketing specialist of HSE Banking Institute. And I'm glad to welcome you all at our third online meetup. So please, as usual, today you'll hear an interesting lecture by our faculty member, who is Elena Dimova. And this lecture will be dedicated to unit economics, but you'll hear the details after my speech. So as usual, if you have any questions which are not about the topic, please write them in the chat or ask them orally after the lecture. So I mean the questions about the project itself or about our master's programs and so on. And now I want to pass the floor to Elena Dimova. So Elena Anatolyevna,
Hi
please.
there. Okay, guys, it's a pleasure to have you here. And I would like, first of all, maybe a couple of words to present myself. I teach corporate finance on the master program of finance and financial analysts. And also I deliver like research seminars, which we use quite productively because we familiarize students not only with the core concepts of our program, but also we introduce and develop the skills in some areas, which is also quite important for those who work in the sphere of finance. For instance, what is going on in startups, also how to price equity deals, what is about mergers and acquisitions, and maybe how to perform a bit more advanced economic and financial analysis for the perspectives of the making investment decisions. So today I would like to make a quick master class on the topic of the unit economics. So it will not be 100% lecture, and I will hope I will keep myself in frames. And I would like to structure our session in such a way that, of course, I will provide you some maybe examples to make you interested in the unit economics. And then we will have an opportunity to perform some calculations together to see in how the simple model, which is incorporates metrics of the unit economics, can drive some business decisions and significantly improve the business model. No, in our case, startup project. So let's start. I'm going to share my screen with you. And as I already mentioned, the first part will be still devoted to some material in order to familiarize ourselves with what the unit economics is and how it can help us to drive business success. And in the second part, please prepare. It will be nice if you have maybe Excel files, no, not files, but Excel functionality. So, and in the end, we, as usual, I prepared a task for you, those who could get more points to your portfolio if you are interested in applying master programs. So you can also even make next steps in exploring unit economic metrics for different industries. And I will be very happy to go through your reports and your analysis. So that's also will be the task for those who would like to go extra mile and enhance their profile. So let's start. Here is the plan. Introduction to unit economics and its metrics, and some practice part, which is focused on the fitness application. So I would like to start with the story of a failure. That's a pity. However, there was one of the company once upon a time, HomeJoy, which was created based on a very nice trend. For instance, today we are all very, very busy, so we like really hunting for money, for emotions, for some interesting things, and of course, to take care of your home, to make cleaning, this is something that we postpone for later or even never do. And based on that, the startup founders, they decided that probably they can create a platform which will connect those who can provide cleaning services, a lot of the different independent cleaners or just firms, and on the other side, those who need to their apartments to be cleaned. So the idea is really brilliant. So we see a huge market, and that's why the startup was really recognized by some venture capitalists. However, over the time, it's really failed. And what was the reason behind this? The idea was the following, that they were quite aggressively tried to market its services. And for instance, they offered very huge discounts for the first clean. And of course, there were many people who prefer to pay for the cleaning of the whole apartments, approximately $15 per hour, whereas the regular price was about $35 or even $40 per hour. And once the people just tried these services, they were quite happy. However, they were not at all prepared to dedicate this amount of money for at the regular price. So the regular price, $25/$40, were not accepted by the most of the audience, and this resulted in their failure because the company overestimated the demand, and they have not calculated, they have not understood that sales of each particular cleaning service is not profitable for them. Using the price that they probably believed that the customers will accept, or at least maybe even with a discount. And what they did, they underestimated the customer lifetime, they underestimated the profitability of one particular cleaning, and this resulted in the failure. So how to cure this? To learn more about unit economics, and some of you may be threatened by this term economics because it's about a very I don't know, huge books that we study macro, and all this crosses, Keynesian crosses, demand, supply. It's absolutely not about that. So unit economics can be defined as a specific area of the analysis where we focus on understanding costs and revenues and the particular metrics for so-called a single unit. No single unit, by analogy, I have here like minions, so like a single unit of something. So therefore, unit economics typically answers two particular questions: how much we spend on attracting one, for instance, new customer, that also can be considered as one unit, and how much we can earn from this client. And there are many unit economics metrics that try really to provide us the full picture about what is going on with our sales of the product or with a particular customers. This idea and this approach is very useful for the IT-related startups. And as you can see, like a startup, not startup, but service. Product as a service or service as a product. And for instance, here you can see that unit may be really different depending on the business. One unit may be for ride-share applications, it may be one trip. Sometimes it may be paid subscription, so how many purchases we made. Also, there may be a specific purchase that the customer make, being a telecom operator customer, or even for instance, airline, it just unit can be a single seat sold. So here we need to familiarize ourselves with the different metrics that are quite applicable in the different industries, but in general, it works like this. So for instance, when we calculate some metrics of the unit economics, we really have a better understanding of how much we can earn from the stream of the customers. However, also we can consider the different layers or categories of the potential customers, because for instance, our connections with potential customers starts with the people just navigated on our websites, and they may not even buy anything. However, there is a quite strong relationships between how much you spend on attracting traffic to your landing page and ultimately what you have as a buying customer who brings you profit, and for how long you retain these customers, and what is so-called customer lifetime value. So therefore, through that metrics, we try to determine how much profit we can earn from the customer stream, and finally, it can give us the understanding if we should scale the business or not. For instance, because many businesses that emerged on some hype, for instance, it might be food delivery businesses or half-prepared food, like maybe Blue Apron, if we use some foreign examples. So they, first of all, think like this: okay, I am a startup, I have a negative cash flow, and no, that's normal, because we spend, we attract customers, and just when we will have a lot of the customers, at some point of time, we will break even. Break even means that we turn our loss generating business in the profitable business. But the trick is that for many startups, this never happens. And the unit economics allows us, even from the very beginning, or at least in the very early stage of our startup when we launch it, already immediately understand if the business is being like profitable or not. So here is a number of the key questions that we answer with the help of the unit economic metrics. So first of all, if our sales or unit or customer is profitable just from the very beginning, should we scale the business, and scaling will lead to increase in profitability, or vice versa, we will be scaling losses. Another application of the unit economic metrics is to figure out which specific sales channel generates you a more qualified, more high quality customers, and ultimately which results in the higher sales and higher profitability. For instance, the company may have online channels, it may have offline channels, it may have some sales through social networks. And in order to assess the profitability of each channel, this unit economics metrics also used. For instance, here I would like to mention that for modern businesses, like huge businesses like T-Bank, Sber, some other even platform-oriented businesses like Wildberries, Ozon, and so on, they calculate the unit economic metrics, which help them really to understand what's going on in the particular segment of their business and how much customers bring them. For instance, here we have relatively even old statistics. It's 2020, so it's like 6 years ago. And even we see that 10 years ago, Tinkoff already started tracking there are such customer metrics as monthly active users, weekly active users, and daily active users. The idea is the following: that if you grow in your customer base and majority of your customers are active users, there is a high probability that they buy something from you, that they pay commissions, that they use your services which allow the bank to earn money. So here is a couple of the examples. Now let's talk a bit about the key unit economic metrics. Of course, probably we will try to focus on the most important one, and I would like also to introduce a couple of the unit economic rules, which like highlighted as some of the core rules. And also I would like to try to cover some concept that we will use in our practical case. First of all, maybe some of you already recognized this sales funnel, which is also known as AIDA framework: attention, interest, desire, and action. And the key idea is that you should track so-called conversion rates. It's the percentage of the customers that comes to the next level, which is closer to making a purchase in comparison with the previous level. For instance, what is the key advantage of the startups and even just for some established companies, online platforms, because you can understand where you are not performing very good. Probably if you can see that some potential customers that visit your landing page very quickly leave your landing page, and only very small minor percentage is still start exploring your website, probably you have problems with user experience, layout, and the overall how to put it appeal and of the website is just not designed nicely to attract the customers, or maybe you generate the traffic that is not quite suitable for your products. Maybe you pay your marketing expenses to some source of I don't know, online search engine or whatever, which generates traffic that is not your potential customer base. So it gives us already a lot of the interesting ideas how we can change the processes and where we should look into. The A typically means actions, so it means ideally purchasing behavior. And of course, for us, it's quite important such a metrics as return on marketing investments, which basically we compare the core conversion rate, how many buyers we have out of the traffic that we generate, and how much money we paid for this traffic. So these are so-called customer acquisition costs. Then a very important indicator is also the duration or lifetime of the customer, which a bit later is evolving in additional ratio or metrics such as lifetime value, which means how much money we get from the customers over the period it stays with us. So therefore, if we can even intuitively understand the retention of the customers is also quite important metrics. And another metric is churn rate, because for instance, some businesses needs all the time to attract new customers because for some reason customers just don't stay for long. It may be for a mobile application, or just in our case, it's for fitness application. Probably it's quite difficult to retain customers and make them continue use this fitness application because maybe in general the people are lazy. Customer lifetime value, I probably again may leave some slides for you for like study in a bit greater details in your additional time when you will have not just maybe lecturing all the time, but I would like to stress that customer lifetime value may also be calculated using different approaches. So please don't be confused by this, but when we build our models based on unit economic metrics, we of course may also focus on the retention rate, on how much money we get from the customers, and if our customers also bring some additional leads and have such a advantage as virality, which help us also to attract new customers. Here we have a couple of the examples of the revenue related metrics of the unit economics. For instance, some of them are quite strange, probably, because the metric that we have on the right-hand side is average revenue per paying user. It's quite straightforward, I mean, easy to understand. We gather all the revenue from all the customers who pay to us, and we divide by the number of the paying customers. So in this case, yes, we consider sort of the average check. So no, that's quite well understood metrics. However, on the left-hand side, we have not that easy to understand metrics, which is average revenue per user. What is the difference between user and paying user or buyer? The user, it might be in the like slang of businesses which develop some online services. It might be just the person who tried our product like free trial for free. They may use our mobile application, but they are not paying for it. So therefore, it's quite strange because we collect all the revenue that comes from those who purchased from buyers, and we divide it by the number of the users. So people who just I don't know, start being familiarizing themselves with our product. So what is the rationale behind this metrics? The idea is that we need also to somehow compare this average revenue per user with the money that we pay for attracting these users. And even on the high level of our sales funnel, we already start understanding if the attracting these users is no, brings us later profit or not, if it's worth doing, or we already in the very beginning spend too much money on the traffic that does not generate us enough revenue and later the profit. Therefore, some other very important metrics is cost per acquisition, or costs of acquire a customer, or customer acquisition costs. So here we calculate them as all the costs. For instance, in most of the cases, it's focused first of all on marketing costs to generate our leads by the number of the buyers. So customer acquisition costs. And of course, these two metrics, customer acquisition costs, we need to compare with the lifetime value of the customer, LTV. Here is a very quick example how we can calculate customer acquisition costs. If we spend $150 on marketing and acquire 100 customers this year, so we just divide this marketing budget by the number of the customer to get the customer acquisition cost 1.5. We can see that also customer acquisition cost differs from industry to industry, and by the way, it may be quite significant because we see okay, probably cost per click is not very huge amount of money, maybe 50 rubles, like 30 rubles, 100 rubles, but we can see that altogether this customer acquisition costs, if we consider it for those who stay with the company, may be quite significant, and for some businesses extremely significant. So it means that the customer should buy from you quite a lot, or have a quite high average check, that you still become profitable. So, and one more interesting ratio, it's return on investments. So here we're talking about mostly, again, marketing investments. Returns, it's quite straightforward. So we take the revenue minus costs and divide that on total costs or total investments. And I would like now focus on the key rules of the unit economics, and we can move to our practical exercise. A bit later, I will share with you a QR code that you can use to download our files, and we will, using this example, try to figure out what unit economic metrics tell us, and how we can try to find the opportunities for improving our business model. The first of all, a very important unit economic rule is a rule of 3. So here we compare the lifetime value of the customers with customer acquisition costs, and this ratio should be higher than 3. I mean, lifetime value should be 3 times higher than customer acquisition costs. So this is considered as more or less healthy investments. And by the way, also this unit economic metrics is something that venture capitalists are interested in, because they also talk this language, and they say, okay, so what is the ratio LTV to CAC? And they have a certain benchmark for the similar businesses that they already develop. They understand, is it healthy, the situation with your business, or is absolutely not healthy? Here I can use another example of, it's several years ago, but still quite illustrative for T-Bank. And for instance, here it is represented as 3 key areas that Tinkoff developed several years ago. Now they also developed as well. Tinkoff Black, it's a card, then Tinkoff Investments, these are brokerage services, and some products for small and medium enterprises. For instance, we can see the unit economic metrics that for these 3 products. And lifetime value for Tinkoff Investments is relatively high. Then customer acquisition costs is relatively low. And if we compare the ratio or consider the ratio LTV to customer acquisition costs, it's really, really nice. So it's 33 times. however, we see that maybe like a bare minimum is about 3. Also, we can add one more ratio, customer acquisition costs payback period, which means how much time we need to recover our costs that we spent on acquiring our customers, buyers. And we see that, again, the unit economic metrics are very healthy. It's just 2 months to recover all these costs and start earning money. For small to medium enterprise products, it's 3 months. And as for Tinkoff Black, it's a bit longer, but still also below 1 year, below 12 months, which also looks quite okay. So therefore, we see that Tinkoff Investments was, at least at that time, a quite interesting product with a very healthy unit economics. And maybe even if we track some usage rates on the Tinkoff Investments application, we also can find very nice statistics. Another rule, it's a customer acquisition payback period. So it should be less than 12 and 15 months. So no, here I already said about this, that less than 12 here is also quite good, here is extremely good. And rule of 40. Rule of 40 we should not treat as a how to put it, mathematical rule, rather than like an intuition. How does it work? First of all, we need to gather some data on EBITDA margin for your business model, for your products, and annual growth rate in percentage. And the rule states that if you just sum up these growth rates, EBITDA plus annual growth rate, what you get, this value should be greater than 40. No, again, from the perspective maybe of the economic sense, it's not quite reasonable to sum up annual growth rate with EBITDA, because this is a different concept. But if we start explaining the intuition, it's definitely work like this. So it means that if you have the business which allows you to get high profit margin, you can allow yourself not to grow very quick. However, if your business has a relatively low profit margin, you should really ensure the very aggressive expansion. And by the way, we see that the expansion of the Uber was exactly pursuing that principles, because they initially provided a very relatively low price for their product, for their rights, their trips. So they need to scale very aggressively and ensure a very high annual growth rate in order still to be on the surface. And finally, the rule of 4, that's another important rule when we consider and compare the churn ratio. It's what percentage of the customers you lose over the particular period to the growth. For instance, and this ratio should be 4 or higher. For instance, if we see that we have a growth rate 40%, this allows us to have a churn rate for our customers 10%. So again, to paraphrase, we may see that if you still lose customers very fast, you should ensure very aggressive growth. Otherwise, if the growth is slowing down, you should find a way that to keep the customers, retain them, and not allow to leave your platform, your application, your business. I guess that's it, like an introduction to the unit economics metrics. I have generated a QR code for you, which navigates you to the Yandex Disk, where you can find some materials. It's a lecture notes. It's an additional task that I suggest you to do if you would like to apply for our program of Master of Finance, and Excel file that now I would like to work with to show you some maybe interesting examples and some logic behind the unit economics applied to a real case. Now I am probably what I can also do, I can duplicate this Excel file to our chat box. So just in case that you missed the a QR code, or it does not work for some reason. Oh, apologies. So
can you show the QR code for 1 moment or few seconds?
okay, I'm back. So now I'm make a second try. Okay, so here I will be maybe a bit more cautious. Can I do it? Does not work. I don't know what's going on. Картинка в картинке. Oh my god. So what's going on? Okay, let's do the following. So probably just again to make sure that you get this file, I shared this file with Rita. And Rita will upload it to our Zoom session. Yes, so here we are. Now again, так, okay, just to double check, Rita, can you please kindly assist me if you can see my screen, if everything is fine?
Yes, it's fine.
Okay, because I have some strange message via Zoom, so I was a bit messed. Let's work with the template. So what do we have? As promised, we have a very nice idea that is based on the healthy lifestyle trend, post-COVID environment. We want to be fit, we want to be strong, we want to earn a lot of money. So therefore, we believe that we can do business based on this fitness application when we engage our clients, customers, and will somehow benefit of this social trend of the healthy lifestyle. We have some input data. I mean what our application is about and what is the information that we will be incorporating in our case. The business model is a subscription-based fitness application, so it means that we were preparing to charge some fees, some price from the customers. We will sell a monthly subscription for approximately 300 rubles per month. We also got some initial period where we worked with the already this application was launched, and we got such statistics that on average the users leave our apps after 3 months. So also here we have information about the App Store commissions, which means that if the customer send money to us, we get 30% less, just 70% of the amount that was built from the customers and transferred from the customers. We have a specific channel to attract new users. It was a social network via VK, Vkontakte. Each user who installs an application costs us 40 rubles. So what does it mean? It means that because we still advertise our application in social networks, there is a cost per click. So if the potential person who might be interested in this application clicks on our advertisement, we pay 40 rubles. There is also statistics that last month we attracted approximately 1,000 new users, and also we calculated that out of 100 users, only one buys a paid subscription. So this piece of information will be quite useful when we are going to calculate our conversion rate. Now we have something to do with this model. First of all, we need to understand finally if our return on marketing investments are positive and quite fine. So in other words, if what we spent on marketing brings us in terms of the profitability from our customers that we ultimately gain, no profit. So if they are more, the profit is more than our investments in marketing. Let's start with this. The template that we have here also focused on some input data. Sorry, say it again. I can't hear you well. Okay. So I will continue. So the template is structured in such a way that we, in the middle, need to calculate some very popular unit economic metrics based on the revenue per user, per customer, also customer acquisition costs. And finally, we need to end up with the calculating gross profit revenue, also per one user or per one buyer. And finally, as I already showed, we need to calculate return on marketing investments. So here, the logic of the model is a bit of the not quite straightforward. We are not going to fill it just column by column. However, sometimes we need maybe to jump between different cells. Therefore, on the right-hand side, we have some navigations, what should be done. And if I will be lost, also you may somehow help me or correct if, I don't know, I will be distracted and maybe make a mistake. What we should do, as we discussed, to understand if it's profitable or not from very beginning. Once we answer that question first, then we need to test several scenarios. For instance, we need to calculate what is the number of the subscription renewals we should ensure in order just to make this gross profit at least zero. No, sort of the break even. Then another question, at what subscription price the gross profit is zero? It means what should be the price for our subscription service? Now it's for 300 rubles per month. Is it enough? Should we reduce or maybe should we increase? What conversion rates allows us to achieve gross profit of zero at least? And also we should maybe figure out what is the most realistic scenario and what recommendations we may have in order to improve our business model, and what are the pain zones that really ask for our attention, and we need to identify them. Now I would like to maybe do my best and very cautiously fill the table. So let's start. First of all, we need to put how many users we have. So the term users, it's again about just the traffic. Users are not those who buy. Users are those who either tried or just were navigated on our landing page. Then we can calculate or just put the information about the conversion rate. So for instance, we see that only 1 out of 100 user really pays subscription. So it means that our conversion rate is 1%. If we would like to assess if it's fine or not, 1%, we may say that it's quite unlikely to expect a really 2 digits conversion rate. So on such services as mobile applications or software and so on, probably a 2 or even 3% conversion rate, it's very nice. So in this case, it looks maybe not quite healthy, no, but still not extremely bad. Then how many paying users we have? So here we need already start calculating because we can use this conversion rate and the number of the people who visited our website, which means that we just multiply 1% conversion rate by the number of the people who visited or just downloaded our application. So here is 10. I'm just also figuring out if I can put some formulas for you. I guess I can do this. So for instance, here, please pay attention to the line on top, which highlights the formula if you are not that quick. Number of orders payments. Okay, so here I would like to maybe follow the instructions and to double check what is next. Populate the cells B5, C5, D5. So we did it. Find average payment count. So average payment count is here. It's the column I. And the idea is that we have the information that on average, the users stay with us for 3 months. And because the subscription is monthly, so they make 3 purchases. So here we have they use application for 3 months, pay for 3 months. This is an equivalent of 3 times they purchase. Then we need to calculate the number of orders payments, and here we can do it as a number of the average payment count by the number of paying users. No, it's how many purchases our buyers made. So here we take this 10 paying users and multiply it by the number of the purchases that they make. I will extend the formulas. So here we have them. And maybe for your convenience, I will reactivate my ribbon here and try to enlarge and increase the font to make it easy for you to track what I do. Let's continue. So we have the number of orders done. Then average price. So the average price, it's comes from our input data. It's 300. If it's fine or not, no, in the beginning we believe that it's fine because it's maybe similar to some subscription for music or maybe paying for mobile phone, or if we want to be very attractive to our customers, probably we even not charge high price. So to make this service affordable and make people interested in it. Then we need to specify the margin, H5. So here we put 70%. So however, in this case, the margin is not just like a margin in finance. It's not the profit margin. It's rather than how much, what percentage of the sale price we get if the commission, like of the Apple Store, is excluded. So no, for instance, we can do something similar when we may be figuring out of some acquiring services and commissions that we should pay, and what we get maybe will be even less than our customer paid us. Now we should move to the next point. For the F5, it's the average revenue per paying user. We need to multiply the number of the paying users, then G5, H5, I5. So J5, H5, I5. Yes. So what does it mean? It means that for every paying user, if our subscription is 300, they make 3 purchases, and no, it's only 70% that we get as a company. Multiplying all these elements give us the revenue that we get for the paying user. So that's what we get from the buyer. Then we go to the acquisition costs per user. So L5 per user, it means its user is not a buyer. So the user, it's just someone who was navigated to our landing page where they can download the mobile application. So according to the task, it's 40 rubles. So here we consider like cost per click. Now we move further. We focus on the column P. It's acquisition costs. So how much money we spent on attracting all this traffic. It's not again the buyers, it's just the traffic. How much we spent on marketing to get all this traffic. We need to take the information about the cost per click, so here, and multiply it by the number of the users that we have. It's 1000. Let me zoom out here and show you the formula. So these are our costs for attracting users that probably later become buyers. Now we focus on O5. It's the revenue. So the revenue is basically the product of what we get from in terms of revenue per one buyer by the number of the buyers. So here we multiply 630 by the 10. So we have only 10 customers. And we already see that, the revenue that we get is like this. Okay. However, the costs is 40. So we get as revenue 6,000, but we spent 40,000. Something does not feel like quite fine. Now we focus on J5. It's customer acquisition costs. So basically what we need to do, we need to divide our acquisition costs by the number of the buyers that we have. We have not many buyers, so it's just 10. Therefore, so here we have that even in spite that cost per click is 40 rubles, it costs us 4,000 rubles to get or to convert from all this crowd, this person into the buyer. So to have one buyer, it costs us 4,000 rubles, even in spite that cost per click is 40 rubles. So for 40 rubles, we get traffic, but because we retain and stimulate purchase not a quite huge percentage of this traffic, the cost, customer acquisition cost becomes quite significant. Now let's go further. K5 is the cost per order. So it is calculated as customer acquisition costs divided by the paying users. Let me check one more time. So here is P5, D5. And we need to put this information. No, it's like a bit of the additional information. Here we did it. K5, so K5 here, J5. So we take the customer acquisition costs and divide it by the I5, it's the payment count, how many purchases we made. No, basically this information is how much money we spent on making one purchase, or somehow stimulating the customer to buy in one particular month. Every sales costs us 1,300 rubles. Then we focus on average revenue per user. So here it's quite straightforward. Average revenue we take, and the users is basically 1,000 users we have here. We get again, for instance, here we even compare these two things. So for instance, it costs us 40 rubles to get just the traffic, one person who will be navigated to our website, for instance, and potentially it may bring us only 6 ruble. Even here we see some discrepancy. So we pay much more than potentially we earn from this traffic. Now we finalize it with the two finalize it. Okay, we end up with final calculations. The gross profit by definition is the difference between the revenue and the acquisition costs. So we are minus, and the return on marketing investments is basically what we get. These are losses by the acquisition costs. So here we have minus 84%, which is not very nice. So therefore, we see that we are in the red zone. Our efforts and our business model, even based on what we already gathered, does not work very nice. So we need to figure out how to cure it. Therefore, probably we can run the solver functionality. I will show you maybe one or two approaches how we do it. No, I mean scenario 1, scenario 2, and maybe in order to save time, after I show you one scenario or two scenarios, others you will try to do on your own, but we also have some ideas what can be done with regard to this business model. In order to answer the questions, so how many average payment count we need to have in order to at least be like zero, neutral, not having losses, we do the following. I go to the functionality data and I need solver. For instance, here I can use this solver to help me, and the idea is the following. I focus on average payment count, which is the number of the purchases. So idea is for how many months I need to retain customers that just not having losses at least. So for how many months they should pay to me. Yes, probably. Sorry, here we should not do that like this. We should set the value return on investments. This is like a target cell, and it should be at least 0, right? So here, what we have in a target function is returns on investments. It should be 0, and which cell we need to change is the average payment count. So then you should select also make the variables non-negative, and using the method non-linear, no, in Russian it's OPG, or in English I can't tell you just now, but you should find the similar option. And we should run and find the solution. I suggest you probably not click on OK, because when you just ignore the results, you will restore the previous models. For instance, we see changes here, and the system suggests that we need to retain customers for 19 months. 19 months, it's almost 1 year and a half. And all this time, they should pay us. So we can see like, okay, one way to improve the model, somehow just make the customers really stick to us for 1.5 years. For fitness application, it's really mind-blowing. Let's try another option. So for instance, we can figure out what should be a subscription price. Now it's 300, maybe some other ideas. I again go to the solver functionality, and here now I would like to change the cell like a subscription. So here it will be 300, and find the solution. So let's check the average price. It should be 2,000 rubles. Okay, for subscription services, probably it's too optimistic. Maybe what content or what service we should deliver that they agree to pay 2,000 rubles per month for subscription services. No, probably it can be done, because if we consider one training with a trainer, it's definitely much more expensive, for instance. However, there are some options that you can get some splits for your payment to visit fitness center, probably maybe for, I don't know now what are the prices, for 4,000 or 5,000 rubles. No, again, maybe yes, but maybe no, it's unlikely. You should proceed with the same logic for other two options. So what should be the conversion rates, and also try to do this. Let's now maybe figure out a bit more realistic scenario. We first of all, let's try to what extent probably, or which price we may rationally suggest. For instance, if we compare with some similar subscriptions for the content that customers value, probably we may even suggest something, no, maybe not 300, but at least maybe around closer to 450, if it will be quite interesting, engaging gamification based on the gamification principles content, which creates some community. No, let's try it 450. We see that still it does not help much, so it just still 78% minus. No, okay, probably we need to combine it with something else. Then probably we can still try to retain customers for longer period of time. Let it be, no, maybe for half a year, if we again engage, introduce some competition, maybe we will be introduce some nice recommendations for nutrition, which is generated by AI agents. So maybe we retain our customers for 6 months. So, and ask them to pay. It's much better. So, but still in the negative zone. Probably we should try to impact the conversion rate. Again, we mentioned that 1 is a sort of the quite maybe small. If we can probably change our traffic, not marketing campaigns from the social networks, but probably from some other other channels, which where will be a better fit with our application and our customer base. For instance, let's check if it's 2%, we see that conversion rates creates a very significant change in our return on investments. So we just shift from 1% conversion rate to 2%, and our model reacts very nicely to that. I one more time want to show you what happened. So before that it was minus 53, but now it's minus 6. So if we figure out how to manage our conversion and increase at least to 3%, no, it's not 3%, it's like 2.5%, we already are quite nice. We already start being positive. So therefore, to sum up, we may see that such unit economic metrics can help us to somehow see the overall picture, what's going on with the current state of our product or business model, find some inefficiencies, and maybe try to brainstorm about what we can do in order to change and fix our model to make it profitable. And here we see that the final result is very sensitive to conversion rate. The conversion rate may be low, probably because something does not work, something is not very intuitively understood by the customers, user experience is not quite nice, navigation is not nice. So these things may be relatively, if not easy, but still feasible to do, and still we can queue our business model, or at least have ideas how to make a loss generating business into profit generating business. Also, I would like to show you the case that I would like maybe some of you who are interested in learning more about unit economic metrics to apply. It's a bit not 100% related to the particular company, but I suggest you to focus on some fintech, maybe startups or companies, and the goal is to analyze and to figure out what unit economic metrics the company use in order to track the progress and the performance. Also, you are required maybe to search for some data, customer acquisition costs, gross margins, churn rate. Please don't send me AI generated projects because here is some tasks that enhances your knowledge, and I suggest you to work to search for some really real data, research, maybe some available statistic or industry reports where you can find some benchmarks on the unit economic metrics, or what companies show their performance through these metrics. If possible, please try to calculate some of them, of these metrics. And of course, we are interested in the analysis, which is backed up by some statistics or even calculations. So if you manage to identify some strong areas or weak areas of their business, and also, of course, we are looking for developing strategies for improvement. So what steps can be done, how to do it, and here also a bit more specific instructions about what the deliverables will be assessed, what should you submit. So that's it from my part, I guess. Hope it was not too long. And now I'm just figuring out how I can return to the not sharing screen mode. I am just
everything is okay now, so you don't share your screen. We see only
I'm not
you,
sharing,
as it
I'm
should be.
not
Yes.
sharing, but I also can't see you. So I don't see anyone. So it gives me like a picture in the picture mode. I don't know how to get out of it. Greetings to you from Ghana. Wow, that's so amazing. Hello, Chance. That's really interesting that we have such a diverse audience here. Okay, so I see that in the chart we have some technical questions. So not something related to the unit economics. So I hope that it was useful, interesting, and please enhance your skills in unit economics, because it's quite relevant not only startup companies, but already existing business. And especially when the business is very digitalized, you can get really a lot from the big data using algorithms, developing specific metrics for your team, understanding very early if the business is going to be profitable or not, will really something that will drive your success. So thank you very much, and yes, it was a pleasure.
Elena, I believe that we have 2 questions from our audience. They are quite big. So one from Igor Kovalchuk. I can read
How
if
can
you
you
don't see.
justify initial assumptions for the model? Up-to-date data is not usually accessible for the public. Okay, so for instance, this unit economic metrics, of course, was calculated on already a startup that has initial like trial period. So it's not just something that you have like a concept, but something that you already tried. For instance, during our classes, we also focus on one existing business. It's Algorithmics. It's online school for which teach math and some programming skills. And these courses were exactly for the school children. And now it is developed as a franchise business. So, but they also built their financial models on the unit economic metrics after half a year at least of launching the trial period and attracting new customers. So as for the task, again, probably try to do your best if you probably have an access to some maybe data from the departments in your company, because currently also today we hosted one of the head of global investments department from Sber, and he confirmed that today one of the key concept is like many businesses inside one business. So it means that if maybe inside your company there are some business units which are focused directly on developing new products or services to the customers, they may also have some statistics. If you struggle to find such statistics, that may be good enough if you gather some cases or examples or average unit economics metrics for startups. Probably you can take a perspective of the venture capitalist. For instance, let's pretend that you select the companies from the startup projects that pitch you some ideas, and you should be interested that these startups demonstrate a specific healthy unit economic metrics. Probably you can make the report from the perspective of the summary of the recommendations for the venture capitalist, what he or she needs to use a benchmark for this industry, what unit economic metrics are healthy. Still, again, it's not for me, it's more for you, because I would like you to, for yourself, understand when you will be maybe passing some interviews, like job interviews, what different metrics are used in industries, in which way the business model differ, what is the specifics, and what is normal in one environment and what is not good for another environment. For me, the task is that you try to form for yourself like quite a comprehensive picture of what are the benchmarks across the industries, or using the example of the particular business, and yes, learn a bit more about it. Where the data for assignment? Okay, so probably let's do the following. I will take these questions with me, what websites we can recommend where we can find data for assignments, and probably provide you maybe not just exact links where you can find the data, but at least maybe explanations and how I can navigate you on your way of preparing this report. Again, my idea is not that just you performed very complex calculations on some data, rather than that you show that you start being quite familiar with the different types of the unit economic metrics, what conclusions we can make, and what real business recommendations we can suggest in order to improve and make the business model profitable. So if some additional information is needed, I will probably try to specify my task.
Great. Thank you, Elena
Okay,
Anatolyevna.
thank you very much.
I
Thank you.
believe that this was one of the most interesting and useful lectures out of all.
Oh, you're too kind.
For,
Thank you.
yes,
Hope
for our
it
students. So, if dear guests, if you have no questions left, I think we can finish here. So, thank you all for joining, and I hope to see you all at our next meetup in March.
Thank you very much. Looking forward to
Thank you
having
very
you
much.
as my students.
very
Okay, bye, guys. Have a nice evening. Bye.
Goodbye. Goodbye. Thank you.
Goodbye.